It's Thursday, May the 18th. I'm delighted to be joined by Mr. Mehmet Ogutu, Group CEO of Global Resources Partnership and Chairman at the London Energy Club, Dr. Radl Kadiri, MD of Energy, Climate and Resources at the Eurasia Group, and Peter McGuire, CEO of XM Australia. So thanks a lot, gentlemen, for joining us. Peter, let me go to you on that. I mean, the market keeps saying, well, we're still a bit uncertain about where China demand is going to go in the second half, etc. Or we're still waiting to see if there's going to be a recession in the US or Europe. We're at the end of May nearly. We've had a few months now to kind of settle into 2023. Why is there still this sort of negative sentiment that's holding prices back when we see supply tightening, etc.? When are we going to see that sentiment turn, do you think?
Well, a couple of things, Dyala, and welcome to everyone and greetings from Sydney. I'll answer it in a couple of ways. First off, when I look, we're halfway through second quarter. We're 6 weeks out from the start of the third, and you would have thought there'd be more demand for crude and for energy, in which there will be, I think, over this Northern Hemisphere summer. You put the end of COVID, you start getting consumers driving motor cars or crisscrossing nations. Certainly in Europe and certainly in America, I think that's going to be a very strong demand picture. The second part is, if I look at iron ore production, and that's what Australia is exporting to China and their appetite, March was the largest month on record as far as departures and raw tonnage, I understand, from Port Hedland, northern Western Australia. So the demand picture to China is immense. I don't know where they're storing the stuff. I mean, they must have some big warehouses. So I think it's the old story. They're buying cheap or cheaper, and they've done that very successfully and played that strategy for decades. And at low times, they buy up big, and at high times, they might pull back. So I don't necessarily believe the numbers. I think it's relatively strong in China. As far as global demand and how they export those finished goods out, well, that's a different story altogether, whether consumers are going to keep on buying washing machines and whatever else. So we've just got to work through that. And then from the consumption phase, rates are starting to hurt, I think. The debt ceiling situation is certainly raising its head. Main Street is saying that the three people to watch, Fed, Treasury, and certainly Biden, and see if they're prepared to massage a deal together with McCarthy, Republican, well, the Speaker in Congress. So I think we could see some fireworks in the next matter of weeks. And it's going to be exciting. US dollar strengthen a little bit. And I think it's a great time to be in the markets trading.
Being affected and by its war effort, we're going to continue to see that sort of Russian production exports go without any disruption.
Yeah, I'll answer that certainly. I'd just like to move back to Turkey for one small second, if I can, and get everyone as far as a checkup from the neck up for our viewers. If we look at the Istanbul 100, in 2018, it was 1,000 points. It was still that in mid-2020. We are now at just under 5,000 points, and it's been an enormous uptick. So what we say about Erdogan, and I'm not here, I sit in Sydney, Australia, I don't have a view on it, but you would have to say that the enormous growth that they've seen in their stock market over the last couple of years has been nothing short of breathtaking. And I'll go into further analysis as far as currency after this question. But as far as Russia's situation, yes, it seems to be onward and upward. I don't see any sanctions or any issues affecting balance sheets. I'm pretty sure that they seem to be motoring along quite well. From an agricultural side, they're telling me that crops are relatively strong. They're telling me that the mining side of things with nickel production and their base metals, nothing's really hiccup there. And their energy, I was in Doha the other week, and I had a conversation with someone, and they said China's demand for Russian crude is strong. India, the teapot refineries in China are, very happy with their Russian crude. So I don't know. I scratch my head here from Sydney, Australia, saying, really, what is the storyline? And it seems to be, I think, more to the tune that their recovery costs, I think, would be fairly economical. And at these sort of dollar values, paying in, depending upon how they're being paid. There's talk that there was Bitcoin, there was talk that it was yuan or ruble, everything but petrodollar. So it seems to be, the more the storyline is the BRIC nations gaining momentum as far as being against the petrodollar, and that seems to have a very strong chorus of many participants at the moment.
Peter, back to you just on that question of, what's going to take to kind of maybe bring prices back towards 80. We have three options there, but of course, another option which could help is this US SPR refill plan. It was being dismissed a lot earlier this year because it wasn't coming to the fore. Would that lend support? Is it lending support to sentiment? And which of those other three factors would you say needs to be the strongest to really get us up there, if anything?
Well, yes, I think it's certainly going to support prices if Biden refills the tanks. So there's the first part of it, and we've just got to wait and see whether he does that. It's hard to comment on his administration. It's been a very interesting 2.5 years so far, and I think he's got a number of big hurdles ahead of him before he gets to the SPR. The second part is, you mentioned quickly, as far as rates and policy and where the Fed runs, markets are saying we're going to see starting from September. This is what the analysts and everyone's hanging their hat on. Whether that materializes, well, we're in May now, and that's 4 months away, so 3.5. So we've just got to ride that wild bronco all the way to September. There's a lot of things can happen between now and then as far as policy, inflation story, more uncertainty with debt ceilings and whether that's managed or it's protracted. So this is where we sit at the moment, and I would say if the market is satisfied and all those ducks in a row fall and everything's okay, then we roll into a final quarter of the year in not a bad position with rate cuts and return to some stronger sentiment and growth. But I think there's a lot of water to pass under the bridge between now and then, Dyala.
Peter, very quickly, US dollar index. I don't know if you mentioned the dollar, but I mean, do you see that sort of, I suppose, weakening in the next 6 months or not on the whole?
Okay, it's had a nice rally to the upside in the last probably week and a bit. We're nearly at 103. We're at, that 101.50. There was everyone saying, are we going to see sub 100? At the moment, there seems to be an uptick as far as US dollar. Now, that could be building on the debt ceiling being sorted. And we've got to live through that. And if that is sorted and all the cards are dealt and everyone's happy, and this time next month it's done and dusted. But if it's not, then I think there's going to be a significant sell-off as far as US dollar. People will lose a faith in it in some ways. And so I wouldn't be surprised for it to be spanked down aggressively. So that's my point. And then the other side is building on what Rad and Mehmet said as far as oil. And I know that they, the $90 to $100 handle is where OPEC want price. I don't think they necessarily want 80. And if there is any chance that it gets those sort of numbers, if it doesn't, I think you're going to see cuts to try and get a fair value. And they're conscious that US dollars come under big sell-off from 114 to 102 since October last year. So you don't have to be a mathematician to work out the differential.
Thanks very much, Peter. Okay, gentlemen, thank you so much. We run out of time. Thanks, Mehmet and Rad, as well, for joining us.
My pleasure.
Thank you.
Thank you.